All right, now as for the previous video, we were here at the profit for the year. As I told you, if you have profit for the year of 3,370, you definitely know that this is going to the retained earnings. So you go and establish the retained earnings control account, right? Wherever you will be, you do not need to say this is which working. So if working 8 here, you can use your own workings. Profit usually increases retained earnings. So profit will stay here, 370. And then after this, if it was loss, it would stay on the debit side. Now we go to the statement of financial position and copy our retained earnings figure. Here under equity, we have retained earnings. So retained earnings, we open with 450 and we close with 780. So you just go and plug it down there. I'm saying again, we opened with 450 here and we close with 780. Retained earnings, it could be an accumulation of losses, so the balance could start with the debit and the close with credit. So you have to be very careful about that. All right. Now you have to check for different possibilities because there are different possibilities here. For example, if it was a loss, it would be on the debit side. What of the dividend? Dividend, if some dividend was paid, actually we would not say dividend paid here. We say dividend proposed. If there is no a control account for dividend proposed, then we say it is a dividend proposed, but it has fully been paid. So that's why I wrote here dividend paid, but usually it should not be dividend paid. It could be dividend that has just been proposed or declared. All right. Another reason maybe for retained earnings, it could be, let's just presume maybe, there are these things we call bonus issue. If you make a bonus issue of shares from retained earnings, I would reduce retained earnings here and I would take them to the bonus issue, to the share capital account. But this would be stated in the question. Our question here doesn't have that. All right. In case of, let's say, revaluation of assets, there is something called revaluation gain transfer. We can usually transfer a revaluation from revaluation surplus to retained gain. So in case it is there, you say transfer revaluation gain, it enters into retained earnings account, and then it reduces the what? It reduces the revaluation surplus account. So if we find out something like this, we'll do it. So I actually advise that when you find something like this, you do not need to close this account directly because it usually has a lot of items. So we have just opened it and leave it as it is. And then we proceed now. Where to our income statement again. Our income statement is here. We are done. We are totally done with our income statement. So no worries at all. So we just proceed down here. Now, you can come and state with the statement of financial position, but there is actually no need to. Usually, the statement of financial position should be the last. So we just come to the additional information first. Additional information, as you see them here. We are told that equipment that initially cost $200,000 was sold for $300,000 when it had a carrying amount of $100,000. Then, both depreciation and gain or loss on disposal of non-current assets are included in distribution costs. Now, I told you this. From the income statement, we saw that we had finished everything, but we are now told that, in these administration expenses, there is depreciation and also there is a gain or loss on disposal. Nothing to fret about. All we are sure right now is that we are also used to obtain profit before tax. So just determine them and adjust for them too because they are items to be adjusted for. So how do I get depreciation? How do I get gain or loss on disposal? I think you could start right away with gain or loss on disposal, right? So what is the gain or loss on disposal? To obtain gain or loss on disposal, I obviously need to take the sales proceeds less the carrying amount. So I sold something for 300,000, but it had a carrying amount or net book value of 100,000. So obviously there's a gain of $200,000. So let's just go and take a look at it here. Gain on disposal. I said sales proceeds minus carrying amount, 300 minus 100, which amounts to 200. Now, how do I deal with this? One item after another as usual. How do I do it? Gain on disposal. Gain on disposal equals to 200 and it increased profit. So I come and write it here, gain on disposal, and reduce that 200. As I told you, if you reduce something, you have to take it to the control account. Where a control account located? Statement of financial position usually. So if you go to statement of financial position, you won't find the word gain on disposal. So since you do not find it, you just find out how was this 200 obtained. Just take a look at it. How was it obtained? We said sales proceeds of 300 minus 100. So deal with 300 separately and deal with 100 separately. Starting with 300, how do I deal with it? It's just a sales proceeds. You know, this is not sales revenue. Sales proceeds does not go to sales revenue. So since it's 300, it means I received this cash because we are not told whether cash was not received. So I said that I received cash, and we say cash proceeds on disposal, which is an investing activity. Any acquisition or disposal of non-current assets would be under investing activity. So we have 300. So we come to investing activities here, and we say cash proceeds on disposal of non-current assets, that is 300, and I'm done. Then we proceed. What about the remaining figure, which is 200, which is 100, sorry. This is the carrying amount. I disposed this non-current asset. Since I disposed it, I need to remove it from the books, right? Yes, I need to remove it from the books. So I have to recognize it. Now, usually when you have an asset that has stayed with you for a long time and it has a carrying amount equals to cost minus accumulated depreciation. So whenever you find its cost, you recognize it. Whenever you find its accumulated depreciation, you recognize it. So it's just like that. Now, to recognize that, you would have to prepare a non-concurrent assets control account, right? Yeah, non-current assets control account, as you see it here. And this non-current assets control account, there are two choices. You can prepare it at cost or at carrying amount. For our case, I decided to prepare it at cost. If you prepare it at cost, then depreciation won't appear inside here. If I paid at carrying amount, depreciation would also be credited. So I just decided to prepare it at cost. So after doing this, now you say, I said I disposed it. I disposed it. This 100 was a carrying amount, actually. I disposed it. So I have to dispose the cost. Because it is at cost, it is not at carrying amount, I have to dispose its cost. Now, how do I obtain its cost? From the question, I think we are told from the question, right? We are told that it had a cost of 200,000. So I can just go directly and recognize that 200. That's why it's 200 here, disposal 200. And now, since we have already written this control account at cost, why don't we go to the statement of financial position and copy the opening and the closing balances? Why? Let's do this. Let's do it. So I just got the statement of financial position as you see it here, and we have tangible non-current assets. We opened with 3870 and we closed with 4240. And here down here we have accumulated depreciation. Anyway, this is the accumulated depreciation and we have the carrying amount. We have decided to use cost, so no need. I can just use that cost amount. So 3870, 4240. At 870 and 4240 here. We opened with 870. Remember, this is an asset, so it has a debit nature. So you open with the debit nature and you close the opening with the reverse of 4240, just like this. All right. You do not need to close it. You can just proceed with other entries. We are at the advanced stages now. So after this, actually, you could ask yourself, we are also told about depreciation somewhere. Yeah. We are told we are already done with the gain on disposal and now deal with depreciation. Now, in some scenarios, you are given depreciation and matters become much easier. But in some situations, you would need to compute depreciation. And if you need to compute depreciation, you really need to use the concept of accumulated depreciation lines. Here, we are given accumulated depreciation from 1800 to 2300. So you need to exploit that, all right? This carrying amount is just a difference, so it's nothing much, so you can just ignore it now. So let's go and open an accumulated depreciation control account. Yes, here we are. We need depreciation, but this is an accumulated depreciation control account. Accumulated depreciation is the opposite of cost, so it will be on the credit side. So balance BD would be on the credit, 1,800, and the balance CD is 2,300, just like this. Do not mind me putting the balance it is up here. We will put it down, but no need for that. All right. What are the entries in accumulated depreciation? If depreciation occurs, it increases the accumulation, so it stays on the credit. If you dispose something, you remove it, right? We are told that I disposed this item with a carrying amount of 100 and it had a cost of 200. So if something was bought at 200 and it now has only 100, that means it has depreciated by the difference, that is 200 minus 100. So to dispose the carrying amount, I say 200 minus 100, which is 100 here. So if you close this account here, this one plus this one, you get 2400 or 2400, which will exceed 1800 by 600. So depreciation would be 600. Now, as per our normal principle, depreciation was used to obtain profit before tax because it was under administration expenses. So you add it back. You say here depreciation, I add back depreciation of 600 as you see there, and then as usual, if you add back something or deduct it, we say that you have to take it to the control account. Now, the good thing this one has been done in the reverse way. This is the control account from which it was obtained. So we're just trying to prove whether this was complete. So I say, oh, I'm done with depreciation, right? Yeah, that's all. So if you take a look at that, there are some accounts that haven't been closed and some have been closed, but no need. We can just proceed with our entries. After finishing with all additional information, then you would be fine to close the accounts because I would just need to know that there is no any other additional information. So let's finish it on number 2. There was an annual transfer of revaluation of 10,000 from revaluation surplus to retained earnings. So I transferred. I removed them from revaluation surplus and I took them to retained earnings. So I say, oh, this is what I did. Let me transfer. So I have to credit retained earnings and I have to debit revaluation surplus by 10,000. All right, I do not have the account for revaluation surplus, so I can start it. Revaluation surplus, here it is. I started with 0 and I closed with 30. So started with 0 and closed with 30. So I'm just going to do that. Revaluation surplus account, revaluation surplus. I'm just going to this revaluation surplus. What is the revaluation surplus account? Here, we have the revaluation surplus control account. So our opening balance was nil, as we saw, and our closing balance was 30. So this is what we do now. From the question, we have been specifically told that we made a transfer of 10,000 from revaluation surplus to retained earnings. So since revaluation surplus is of a credit nature, to transfer it, I transfer 10, so I debit it by 10 here, and then I credit that amount to the retained earnings account, right? So I just go to the retained earnings account here. Retained earnings, we had opened it already, you see? So I say transfer of revaluation gain by 10. After having done this, you would find out that you have dealt with the income statement already. You have dealt with all additional information, so you can close off your accounts, which you have already prepared. So I just come here and say, oh, the total on the credit side is here, 450 plus 370, right? Plus 370. All right, you could just switch off your video, right? You could switch off your video, it would be much finer, right, my friend? Just switch off your video so that we finish this and we proceed. All right, so if you add them, you get 830, which would be the total here, which is the higher amount than 780, and then the difference would be 50. This 50 is usually the dividend proposed or declared, not the dividend paid. I'm repeating again. The dividend here is the dividend proposed or declared, but in case in the statement of financial position, you do not find the dividend liability, it will be the dividend proposed or declared, but it would have been fully paid. So I could just say dividend paid. So, but you really need to understand what goes on right here. All right? Yes. So I'm done with that. So I could say, oh, I got the dividend paid here of how much? Of 50. And then as for the revaluation surplus account, you can also close it. Where is it? Revaluation surplus account, I could also close it. 30 plus 10 equals to 40. And this was 40 again. So if the revaluation surplus As a credit balance, this would mean a revaluation gain. Obviously, it would be a revaluation gain. So I would say, oh, now I have a revaluation gain of 40 and I paid a dividend of something. So let me go and take this revaluation gain. Where does the revaluation gain go? If revaluation gain occurs, we debit the asset and we credit the revaluation surplus. It's already credited here, so I go and debit the non-current asset. So the non-current asset would be debited by the revaluation gain of 40, as you see here. All right, that's we are done with this, and we go and put that dividend figure. How much was it? How much was that dividend figure? The dividend figure stays under financing activities here, and it was 50. So I do that and I'm done already. So you can just proceed to close of the account which I didn't close. Interest was closed, depreciation was done, gain on disposal, non-current assets not yet. So just take the higher figure between these two. So this one plus this one plus this one, 4,240 plus 200, you get 4,440, which is the high amount here. So if you take this and subtract 3870 and 40, you obtain 550. And this would be the cash paid, as I told you, because it is on the debit side of the control account. So I say cash paid, that means an acquisition. So we acquired non-current assets by the total amount of 530. So it would come under investing activities because it's an acquisition of non-current assets, 530 here, just like this. And now we just have to proceed with what we haven't dealt with already. So we have one income statement. For the statement of financial position, you now would have dealt with all of the additional information. So you just go and scrap the remaining line item, right? So here I have investment in non-current assets. These are usually maybe investment in shares, investment in debt, things like that. So since there is no any other information, you really do not need to start the control account. You can just do it directly. I opened with nothing and I closed with 400. That means I acquired 400, right? So you could have done it directly here, where from investing activities, cash proceeds, what is it here? Acquisition of investment in non-current assets, 400 minus 0, it's obviously we acquired something of 400. But usually we prepare the control account, right? Yeah, so it's just something like that. So let's proceed for the remaining line items. Non-current assets are over, then we come to current assets. Now, as for current assets, we have cash. You know, this is a cash. It is a cash. We say cash and cash equivalent have their own item, but down here we have investments with 60 days maturity. Any investment with a maturity not in excess of 3 months or 90 days is regarded as a cash equivalent. So both cash and investments are regarded as cash and cash equivalents. So you just take the opening balance, 160, which is 160, 680 and 100, you get 780. And you just go and plug them down. Of course, in an exam, because they are the last points, you do not need to start them. But since I'm just trying to show you, you could just see here, 100 plus 60 and 680 plus 100, which you obtain is 160, and here you obtain is 780. But this is usually done at the end, right? Now you proceed with your items. So now we are done with non-current assets. We are done with current assets. And then you proceed with equity, non-current liability, and the current liabilities. Now, as for equity, I only remain with the ordinary share capital. I opened with 1,000 and I closed with 1,400. So the difference, I opened with 1,000, but now I have 1,400. If the only reason is cash, it means that I received cash. Even if you decided to open the control account, I would have credited 1,000, debited 1,400, and the balance would be on credit. That means I would have received cash. Note that if you are given the account with ordinary share capital and the share premium, we use the same control account. We'll see those examples later. So as for ordinary share capital, we say that there's an increase from 1,000 to 1,400. And as for the ventures non-current liability, it has decreased from 1,030 to 950. Liabilities have decreased, that means I've paid, so there's a cash outflow. So take this one minus this one. And then everything will be done. Current liabilities are already done. So let's just go to finish up that. So you see here, issue of shares, we said working 7, and it was just a difference of 400. Let's just go to see working 7, but there was no need here because it was obvious, but it's just nice for you to know so as to understand the common elements that are used. As for the ordinary share capital, we have the balance, opening balance, you would have the closing balance on the debit side here, and then in case you issued more shares, they will stay on the credit side. So I would have cash received of 400, or you could have done directly because there is no any other information. All right, and for the rest, which is those loans, we said we opened with the debentures of 1,030 and we ended up with 950. That means we paid. So we redeemed those debentures. Redemption of debentures, which is 80. You know, these debentures and loan notes are marketable securities and we usually redeem them. We do not pay them like bank loans. So instead of saying repayment, just say redemption. It sounds much better. Outflow. So after this, you are done and you just have to take the sum of your figures. So if you start 600 less 200, you just call your figures here, you would obtain 1,050. If you this is cash generated from operating activities. If you less 80 and 40, you remain with 930, right? And if you come down here for investing activities, you would have 50 plus 300 less 530 less 400, you would have negative 580. And down here under financing activities, negative 80 plus 400 minus 50, you obtain 270. If you sum them, it's 930 plus 270 minus 580, you remain with 620. Now you have to prove. This 620 is the net cash flow for the period. If you add them to the opening cash flows, to the opening cash and cash equivalent, it would reach this figure. Now, if 620 plus 160 equals 780, yeah, that's right. 0 plus 0 equals to 0. 2 plus 6 equals to 8. 6 plus 1 equals to 7. So yes, I'm sure it is the same. So I'm done. So this is how the statement of cash flows is approached. Actually, later I'll just try to take a look at the direct method and see how we deal with it, but just under the operating section. Thank you very much, and subscribe if you don't subscribe. And then until next time.